It is the beginning of a new month. The FOMC is out of the way and I am back from Paris. So there is no more better time than for us to do a full deep analysis on Bitcoin. We're going to start from the monthly close and work our way down and see if we can build some sort of expectation about what we may see happen for the month of August. If you are new here, my name is Annie and this is Trade, Travel, Chill. This is our home of learning to trade like those that move the markets. So be sure to hit that subscribe button, hit like if you haven't already, and let's get into this video. Now, when we look at the monthly time frame, we can see that we are well and truly clearly in a bull market. We have been moving up for quite some time, but the last few months have actually been fairly low volume, not all that interesting candles. Closed with a doji, which is an indecision candle. It's not bullish, it's not bearish. There are attempts to take price higher and there are attempts to take price lower. This to me signifies liquidation hunting, and liquidation hunting, as we know, is where the market maker builds their contracts before making the next big move. What we have to ask ourselves now is August going to be the month where they make the next big move? When I look at this, it looks like a traditional bull flag. So I do think it is macro bullish. It is a good sign that the bull market is not over at this point in time. But does that mean that August is going to be the month that we break out to all-time highs? It's not necessarily saying that at all. What we can see here is that in the month of July, we did tap into 50% of the monthly vector candle right here from February. That was at about $53,000. My thing that I would be waiting for over the next couple of months would be to see if we take a second tap into that area, potentially even break a little bit lower than it, because it would just be testing the support line of the flag anyway. So whilst this is building a macro bullish pattern, it doesn't mean it's bullish right now. What it should signify to you, however, is that whilst we are building this pattern on the monthly time frame, it really is a good spot for you to build your long-term investments slowly over time. When we move down to the weekly time frame, there are issues here. We're zooming right out to the last bull market. We can see that price has tapped on the upper sloping trend line. And since then, we have just been building a channel. But where I say we have cause for concern is when we have a look at the current candle formation right here. Now, there are still 3 days of this weekly candle to go. So anything can happen in 3 days, but keep an eye on how this weekly candle closes, because this is starting to form a potential star formation at the peak here. And if it does, that is actually a bearish candlestick pattern, and it may signify that we're going to come down a little bit more before there's any chance of heading further up. Now, again, for long-term investments, we want to be buying when price is low. So that shouldn't worry you. But for those wanting a breakout of the all-time high and continuation of the bull market now, this is not signifying at this point in time that that is what is going to happen. Again, 3 days to go on this. So can't call it right now, but definitely keep an eye when next week opens how this actually closed. Moving on to the daily time frame, and things get a little bit more interesting. We can see here that, again, we're just in this range and we've been in this range for a while. We expect this range. It is the halving range, and it's essentially in a whole big accumulation phase before the market can take off. We do have a pretty decent liquidity zone between about 59 to 63K. We haven't tapped into it yet. If we did, and even if we tapped right into the bottom of it, it would still just be around the 200 EMA on the daily time frame. So still not massive cause for concern. But if we break below that, there is a risk of us creating a lower low. So keep an eye on the 200 EMA. If we break it, then we're starting to look down at this liquidity zone between about $51,000 to $54,000. So I've been talking about this range for quite some time now. I'm still not ruling it out. However, I'm first of all waiting to see if we hold the halfway mark, which is where the price is right now at about 63.5. If we break that, then I want to see if we hold the 200 EMA. If we break that, then this becomes more of a probability that we're probably going to head there. The 12-hour time frame is where the model that we trade on this channel is playing out most perfectly within the accumulation range. So you can see here, since we had our peak formation high almost at about $74,000, we can count our 3-level drop. There was a V bottom reversal, and we can count our 3-level rise. Followed by that was an M formation, which is also a reversal sign, 3-level drops out of the M, then a W formation, which is a bullish reversal sign, and we've had our 3-level rises from there. So the accumulation range is still giving us rises and drops. It's just giving us sideways ones where it's creating this range. It's not actually giving us a trending higher and lower prices. Now, what I'm waiting for on this is to see if this drop that we had here on Monday is the beginning of a potential other M formation similar to this. Right now, we're on the 200 EMA of the 12-hour time frame. If we happen to bounce and start to move up, that is where I will then start looking to this vector candle right here to see what price does in that zone. If price starts to move up and comes either to the bottom of it, the middle, probably not the top, but the bottom or the middle, and it gives us a rejection there with bearish candlestick formations, that's where we may get that second side of an M, which will look very similar to this. And that will confirm to us that we are coming down one more time within this accumulation range. And being the 12-hour time frame, that could take a while to play out. If we have a look at where this M formation formed until the reversal, it was 45 days. So that would lead to actually a bearish August and also potentially bearish September as well. Not that I think that's a problem. As I said, I do think that if we head down over the next 2 months, it's extremely positive for the long-term macro and is probably our last opportunity to buy. And all I'm really looking for myself is for evidence that we're not going to break down further. So the evidence will come if the price does move back up into this red vector candle and break through and above it. When we look to the 4-hour time frame, we can see recently how we had the W formation, which was the sign to open a long position. We can count our levels through here. We actually had an extension on this one, which was expected. What an extension is when you have your 3 levels play out, and at level 3 there is no clear sign of reversal, which there wasn't in these candlesticks here, and it also usually lines up with a news event. So in this period of time here, we had all of the talk of Trump appearing at the Bitcoin conference, and that was obviously very, very bullish for Bitcoin at the time before we heard what he had to say, which was not much, but anyway, that led to people continuing to buy. And so that's where an extension can come in. An extension is essentially where the 3 levels play out, but at level 3, the market maker hasn't hit the target that they need to hit. So using the news event as the excuse, they can issue simply another level rise. And people will fall for that because it's leading into a news event. And that final level rise is the extension. And that extension helps them to get to the target. So that's what we saw happen here. And that's what that looks like in this model. And then we've had our first kind of rejection. And now, like I said, we're waiting to see if this pretty much happens in reverse here, and we get something that might look like a 4-hour M formation. And that can take some time to happen, but it doesn't have to happen. We don't have to always have W and M formations as the sign of the reversal. There can be stop hunt formations, trapping volume, half Batmans. There's many different types of reversal patterns. M and W's are just the easiest ones to identify. So if you are wanting to learn all of them, consider joining us at TTC. There is a link in the description of the video, and a monthly membership gets you access to all of our courses. Moving down to the 1-hour time frame, this is starting to get a little bit messy. I apologize, but I just quickly want to go over how the week has played out so far. From last week, where we had the midweek reversal on Thursday, this was actually a stop hunt move out of consolidation into very high level heat map orders that we identified on Trading Light at the time. And from there, price bounced out fast and didn't really give us a chance to get a retest type of entry. So unless you understand these type of stop hunt orders, there probably wasn't a chance to get in. However, this is typical of the extension that I was talking about on the higher time frame. It is a final extended move designed to cause FOMO, to make you make an irrational decision because the intent is coming to reverse price. And so that's what happened here. We had this final move up. We broke the high of the week and this here was consolidation that consolidated above the high of the week. And then we had the final stop hunt again, which is the reverse reversal move before we move swiftly back down. Now you can catch this on a smaller time frame than the 1 hour, but I'm just showing it to you on the 1 hour time frame. As we were heading down yesterday, there was a lot of talk about whether or not FOMC would be bullish or bearish for Bitcoin. And this chart that I'm showing you right now is a chart that I actually tested the TTC community on without telling them anything. I posted this chart and I said, what do you think I'm trying to tell you? And what I was trying to tell them at the time was that price was consolidating here right before FOMC, and it was consolidating around 3 important levels. It was right under the initial high of the day, 50% of the high and the low of the day, and 50% of the high and the low of the week. All 3 levels lined up around here. It was very, very significant, and price was failing to get above it during the UK and the Asia sessions yesterday. Now, usually the end of session issues an extension, and the extension sets up for the market makers of the next session. So what I was telling the community right here was have a look here at this imbalance. When you see this is where price doesn't like hanging around for too long. When we see these low volume nodes right here, considering that was just above this important key level, what I was telling the community was expect a spike up. If it doesn't stay there for too long, we're coming back down. And that's why this area was circled. It ended up happening in US, but the level was pretty much exact. And so that has led to our level 2 drop. So we can count here a level 1 drop into consolidation and a level 2 drop. And now we should be expecting a 3rd level drop. So the 2nd level has taken us to a full recovery of this vector candle right here. So that is now done. We did have some long orders last night, but they were picked up. And now it looks like price is attempting a bit of a consolidation. If price cannot get back above the 50 EMA, well, first it's got to get back above the 20. So if it can't do that, that's bearish. But if it does get back above 20, then we would be looking to see what happens around the 50 EMA, also around the initial high of today, which is at 65,120. So if price moves up and it can't get back above pretty much this whole zone right here, then I would expect a 3rd level drop. Now it is Thursday. That's the only thing to be aware of. And Thursday is midweek reversal day. However, usually at midweek reversal, you can count 3 levels before we reverse. At this point, I can only count 2. So I'm kind of wondering if we will just have this little bit of a retracement, come down for level 3 and potentially have a bearish week and we don't actually get our midweek reversal, or it happens as part of the Friday trap. So for me personally, I don't see any reason to take long positions right now. A, there's no W formation. B, the count is wrong. C, there's no stopping volume candle, which signifies the final trap of traders in the wrong direction before we reverse. So I would expect further downside. When we have a look at the significant liquidation levels that are closest to the current price, we can see that there is a fair bit of liquidity below the current low of the week. The low of the week is right here at about 63,470. So if we do break below that, then we could come for some of these levels, say about 62,400 to maybe 61,800. And that would give us that level 3 if we did come back down there. We're starting to build liquidity above price, but again, I just follow the one trading strategy that I know well, and that is to count my 3 levels. So if price were to reverse from here, all it simply means is that the market maker is doing something different. And when the market maker is doing something different that is against the model, I simply sit out until something is clearer. I'm not somebody who will trade a long position when it goes against my rules. So I'm expecting either further downside, which I will just stay in my short and I'm just looking to take profit and flip into a long position. If I don't get further downside, I would simply take profits on my short and sit out. If you're looking for somewhere to trade, be sure to check out 𝗟𝗃𝗃𝗃. It is a non-KYC exchange, so you can use it anywhere in the world. And with the link in the description down below, you will get 25% discount off your trading fees for life. And it also gets you access to the free section of our Discord where you can get some of my chart updates in between doing YouTube videos. So be sure to check that out and come and join us over there. And taking a final look at the heat maps, it actually looks like we have significant buy orders below price. We don't really have any short orders. Again, this might lead to the model doing something different. Like I said, I won't open a long position on that. I will wait till it's clearer. But this is interesting because it does show that there is a lot of interest in defending the 64K level, which is that 200 EMA that we talked about on the higher time frame. So when we zoom in on this area, we can see that the highest level of orders are in this whole block here, and that sits between 63,850 to 64,050. So if price does happen to come back into that zone, that's where you will drop down to lower time frames and have a look for bullish candlestick formations. If we get that, then the 64K level may hold for now, but it's really going to be dependent on whether or not we revisit this zone and how the candles close at the time.